Well, this time around, we're going to welcome to the show Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri, and we have all sorts of stuff to digest here today. Brian, it's a Crop Progress Tuesday, we call it. Well, the corn rating actually improved a point. We had the soybeans staying the same last week, according to USDA. And the market, for whatever reason, even though most of the rain in the eastern half of the Corn Belt just turned into just a scattered variety that didn't amount to a whole lot, and now we're looking at a dry week ahead, the market is selling off today. Let's take a look at the corn and the soybean trade here first. In the corn market in Chicago, we currently have that September contract 4 3/4 lower at 412 1/4. In December, new crop corn down 5 1/4 at 421 3/4. I will note the low of the day in December corn is 421 1/4. And Brian, I know you've been watching that contract because you and I have talked about that numerous times. There's that gap going down to, I believe, 420 exactly. And it keeps going down there and testing it and not filling it. We were talking about that earlier today. Is that significant to you?
Well, it certainly will be, depending on our close. This is the lowest we've traded corn since about July the 2nd. We continue to just bleed lower in this corn market without really much of a way of any type of significant rallies. And it's frustrating for farmers, as you mentioned. There's not a lot of rain that has fallen in the eastern belt. That's the areas that's concerning for the trade right now. The crop ratings are the lowest in eastern belt. Without much rain in the forecast, you would think we'd see some sort of a little bit of a bounce or premium being put into this market, as ratings are the lowest since 2012 for the corn. But we just continue to slide lower. So that area that you talked about, that 420, that's a real key on the charts here. We closed on July the 1st at 421. We certainly don't want to close below 421 or 420. It really opens the door for more fund liquidation, technical selling all the way down to the 406 area if we don't get some sort of a rebound in this market.
I've had a couple of brokers mention to me that they thought there were probably a bunch of buy orders holding around that 420 mark. If it would get there, they were looking at that as a buy point. What do you think about that idea?
Yeah, there's been a lot of end-user commercial buying between the 420 and 425 area. We continue to see that offsetting the long liquidation by some of the speculative long traders. They continue to be sellers, as evidenced by the Commitment Traders report. That selling could accelerate if we do close below 420, but otherwise we're going to see end-user buying probably support this market in this 420 area. Kind of right in this area between 420 and 425.
On the soybeans, let's jump over there. And on the September contract on the soybeans, we now have a last trade at 885 3/4, which is down 5 3/4 cents. Yeah, it's down, but it's off of its earlier low this morning by nearly 9 cents now. Quick question on the soybeans. We keep seeing all these good to excellent ratings on soybeans, but I have some people pointing out, how does USDA give a small plant of soybeans that's 6 inches tall a good to excellent rating when it should be about thigh high by now?
Well, it's a good question that you bring out. And even with these crop condition ratings that we're seeing, these are the worst for soybeans since 1992. And yet we've dropped to the lowest levels on the charts since going back to June the 13th this morning, as we took out some 893, which is long-term weekly chart support. Looks like that may hold on a closing basis. We're bouncing off of our lows here this morning. We're not doing that so much in the corn, but I think the soybean market trying to pay attention to some of the longer-term forecasts. It's a cool forecast, but it's not entirely wet. Not really that threatening. If we would get some rain showers, that would really help out the soybean crop. And we're probably going to hover around this $9 mark as we go into first notice day against the August futures, and until we get to those rain events that we talked about a little bit closer, maybe we can get a better handle on the weather and the forecast for rains. The
wheat is lower too. We have that Chicago on that September contract showing losses of a few pennies today. Currently, it is now trading at 497.5. That's down 6. Kansas City wheat has also been lower. We're down about 4 3/4 at 431 3/4. Likewise, Minneapolis wheat down roughly about 3 cents, down 2 3/4 at 530. We'll be back talking with Brian Hoops about livestock when we come back after this. All right, on the livestock trade, as we get further into the trading session here, live cattle on that October contract are now trading 73 lower at 108.72, and December down 63 at 113.22. On the feeder cattle market so far this morning, we have September now 15 higher at 142.97. So it's gained back off of its earlier low about $1.30 now. So a big rebound there. October now 33 higher at 142.90. And on the lean hogs, where we closed limit down yesterday in October, we have expanded limits, and it did use it today, but it's not there right now. October lean hogs currently down $2.50. We're at 73.95. December down 2.17 at 73.28. Brian, I don't know about you. I haven't heard anything on the cash cattle wire today. Heard anything out there?
No, we haven't heard any real trade or even bids. Maybe a couple bids starting to develop in Nebraska around 183 at this point, but it's been pretty quiet in the cash cattle markets. The futures certainly stymied by increased show list compared to a week ago. That sent the wheels in motion of a poor close yesterday and some follow-through selling today. Hogs are also seeing some long liquidation. And October has dropped down to a 62% retracement of this latest move. So it's kind of a technical trade in the hogs.
Where would that put support then on that hog market right now?
Well, October hogs did bounce off of that longer-term support. 62% retracement is 73. That's basically the low of the day, and that's your next support area. There is a small gap to go fill at about 71 if we want to go test that area.
Okay, well, thanks for pointing out those critical chart points for us. Appreciate that very much. Brian Hoops, now he is the president of Midwest Market Solutions in Springfield, Missouri. All kinds of stuff to talk about today. Wish we had more time.